What is the difference between reinsurance and co-insurance? Actually, co-insurance means different things in US and Europe. In US, co-insurance is, indeed, sharing of a claim settlement between the insurance company and the policyholder, like John Gear, Ingrid Halvorsen and Neil Marcus said. And really, this is sort of apples-oranges comparison, because such co-insurance and reinsurance have nothing in common. In Europe, things are different. Here, co-insurance means exactly what Sachin Mahajan said, sharing of risk by two or more insurance companies. In case of big risks, one risk is sometimes proportionally shared by different companies. One will be responsible for half the loss and other takes the other half. Main difference for policyholder is that in case of reinsurance, policyholder does not have to know about reinsurer. He cannot make direct claim to reinsurer and original company cannot avoid payment, should reinsurer refuse his part. In case of co-insurance, all insurers are responsible directly to policyholder. Co-insurance is the policyholder's portion of the claim. For instance, in major medical insurance, usually after a deductible, the first portion of a claim, or claim year, after which the company pays X%, usually 50%, 60%, 70%, 80%, or 90%, the co-insurance is 100% X%, usually 50%, 40%, 30%, 20% or 10%. Reinsurance is insurance that is purchased by an insurance company. Usually over $buy per year, or per claim. Say a large insurance company might keep the first $200 million, and buy protection from another company or companies, for all claims that go above that amount. Or, especially in the property insurance marketplace, the primary insurer might keep, for example, $300,000 per claim, and buy reinsurance through other company IEs for amounts exceeding that limit. Co-insurance occurs when two or more title insurance underwriters proportionally insure a given transaction via separate title policies. The amount of risk is shared in proportion with their policy amount. Each underwriter issues separate policies for their amount of the liability, not for the total amount of coverage. Therefore, the sum of the underwriter policies would equal the total transaction coverage amount. Reinsurance occurs when an underwriter, or insured, wishes to share some of the policy's liability with another underwriter. While the original underwriter will write the policy for the full amount of the transaction, they'll purchase reinsurance for claims arising from a certain rupees amount from another underwriter. Reinsurance. When an insurance company purchases insurance from other insurance companies in order to insure against a loss, it is known as reinsurance. In this case, the insurance company that is buying the insurance is the policyholder and the company that is insuring the insurer. Thus the company saves itself from a potential risk of loss by insuring it from a reinsurer. Co-insurance. There is a fixed percentage that needs to be paid once you have hit your deductible for the year. Co-insurance applies to health insurance policy and the property insurance policy both, but the application is different in property insurance than with health insurance. Plans having lower monthly premium have higher co-insurance, and plans with higher monthly premiums have lower co-insurance. Co-insurance is the portion of the claim that the policyholder is responsible for. Reinsurance is an insurance product that is bought by insurance companies to spread the losses on the policies it underwrites. A reinsurance company agrees to indemnify an insurance company for claims above a certain dollar amount. Reinsurance companies may have oversight on large claims to make sure that its interests are being protected. Policyholders never interact with a reinsurance company. Reinsurance, also known as insurance for insurers or stop-loss insurance, is the practice of insurers transferring portions of risk portfolios to other parties by some form of agreement to reduce the likelihood of having to pay a large obligation resulting from an insurance claim. In addition, you can have a co-insurance arrangement where more than one insurance company splits the risk of a loss. I have specialized insurance protection for collectibles and it's done by a syndicate of 4 different companies, each of which takes a portion of the risk. Reinsurance has become big business nowadays because many regional insurance companies can face horrendous claims if there is a local disaster, like a hurricane. Hurricane Andrew, for example, did more damage in Dade County, Florida than had ever been collected in insurance premiums there. In reinsurance, the reinsurer essentially sets a very high deductible and then agrees to pay any claims over and above that deductible. Like the insurance company, they charge a premium for that coverage. Since they reinsure companies all over the world, they can spread out the risk of a local disaster.